To invest wisely, it's crucial to have a solid understanding of the market. To put it in Benjamin Graham's words, it's important to have a clear understanding of what you're doing and why. If you lack knowledge, it's best to avoid investing until you've gained a better understanding. However, if you're aiming to create a portfolio that generates long-term income to support your financial needs, this video can assist you in achieving your goal. Hey, welcome to Stock Market Mate. In today's video, we'll talk about the 5 dividend stocks to make the perfect portfolio. Before we start, do leave a like and subscribe to the channel to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Dividends are very well liked by investors, especially those who want a consistent income stream from their holdings. Some businesses decide to distribute their profits to shareholders. These payments are referred to as dividends. The company's board of directors decides on the dividend payment size, procedure, and timing. They're typically given out in cash or additional company shares. Even in the absence of a profit, a company can still pay dividends to shareholders in order to maintain their history of doing so. The majority of businesses that pay dividends do so monthly, quarterly, or annually. There are two types of dividends: regular and special. Regular dividends are distributed on a regular basis. Companies pay these dividends with the expectation that they'll be able to keep them steady or eventually raise them. The distributions that are made from the company's profits are known as regular dividends. On the other hand, special dividends are typically paid out only once and are paid out following certain milestones. If a company's earnings exceed forecasts or a business unit is sold off, the company may decide to reward its shareholders with these payments. Why dividends? For a variety of reasons, many investors decide to include dividend-paying stocks in their portfolios. First, they offer regular income to investors on a monthly, quarterly, or annual basis. They also provide a feeling of security. Investors want to make sure they have some stability because stock prices are prone to volatility, whether that's due to company or industry-specific news, or factors that have an impact on the overall economy. A large number of companies that pay dividends have a history of success and profit sharing. Now that you have a little background of what dividends are and why a lot of investors like them, let's start with a countdown of the 5 best dividend stocks to make up your portfolio. Number 5. Microsoft. Don't be deceived by the recent underperformance of Microsoft stock. The underlying business of the software powerhouse is still impressive, despite shares dropping about 29% last year and even about 5% year-to-date. Therefore, during this pullback, investors might want to think about buying some shares of this stock. Investors seeking dividend income that has the potential to increase in the coming years will find the tech stock particularly alluring. Overall, Microsoft is a trustworthy dividend stock that could offer investors a consistent income stream and the chance for capital growth. The business posted double-digit top and bottom line growth in its most recent quarter, capitalizing on Microsoft's sound financial position. $50.1 billion in revenue and $17.6 billion in net income were up 11% and 14%, respectively, from the previous year. It is not surprising that the company has delivered strong dividend growth to shareholders given the strong momentum in its core business. Microsoft announced a 10% increase to its dividend payout in September of last year. Furthermore, the company increased its dividend for investors for the 20th year in a row. The new quarterly dividend payment is $0.68 compared to the previous $0.62. This indicates that Microsoft currently pays shareholders $2.72 annually per share, giving the stock a dividend yield of $1.1 at the time of writing. The payout ratio, which measures Microsoft's annual dividend payments as a percentage of annual earnings, is impressively low, which is something investors should take note of. Currently, the company's payout ratio is under 27%. This provides ample room for dividend growth in the upcoming years. Number 4. PepsiCo. PepsiCo Incorporated is one of the top global food and beverage companies with its headquarters in Purchase, New York. Frito-Lay snacks, Pepsi-Cola drinks, Gatorade sports drinks, Tropicana juices, and Quaker Foods are some of its complementary brands and businesses. More than 200 countries and territories are served by the company. Pep has a VGM score of B, a growth style score of B, and a Zacks rank number 2 buy. Sales and earnings are expected to rise by 8% and 7.2% annually, respectively. Since March 30, 1973, PepsiCo Incorporated has distributed quarterly dividends to its stockholders. In comparison to the non-alcoholic beverages industry median dividend yield of 0.0% as of April 23, 2023, PepsiCo Incorporated had a relative dividend yield of 2.5%. The dividend yield for PepsiCo Incorporated was 2.5% in 2016. PepsiCo Incorporated has been disbursing quarterly dividends that range from $0.10 to $1.15 per share since March 30, 1973. The dividend yield for PepsiCo Incorporated has been 3.0% annually on average over the previous 5 years. Number 3. Abbvie Incorporated. Since February 15, 2013, Abbvie Incorporated has distributed quarterly dividends to its stockholders. Abbvie Incorporated had a relative dividend yield of 3.6% as of April 23, 2023, which was higher than the 0.0% median for the pharmaceuticals industry. The dividend yield for Abbvie Incorporated was 3.5% in 2017, has distributed quarterly dividends totaling between 0.40 cents and $1.48 per share since February 15, 2013. The dividend yield of Abbvie Incorporated has been 4.5% annually on average over the previous 5 years. Overall, Abbvie Incorporated's current dividend yield of 3.6% places it in the 83rd percentile of all dividend-paying stocks with U.S. stock exchange listings. Over the past 5 years, its compound average dividend growth rate has been 17.1%. Abbvie Incorporated has a D for dividend valuation, an A for dividend growth, and a C for dividend strength. Number 2. Lowe's Companies. Lowe's Companies has made great strides under the direction of CEO Marvin Ellison in terms of both strengthening the business and catching up to home improvement retailer Home Depot. With Lowe's outperforming HD over the past 5 years, its share price has increased by almost 130% compared to HD's share price increase of 65%. Lowe's experienced an average growth in free cash flow of 9.7% from 2014 to 2018. During the time Marvin Ellison has been in charge as CEO, from 2019 through FY 2023, Lowe's has experienced free cash flow growth of an average of 34.2%. As a dividend king, a company that has increased its dividend for 50 or more consecutive years, Lowe's is exceptional because this signifies that it is a much more established business with slow and steady dividend growth. There aren't many stocks that are both dividend kings and dividend growth stocks. Lowe, on the other hand, defied the trend by raising their dividend at an average annual rate of 20% over the previous 5 years. Number 1. Chevron. One of the biggest integrated energy companies in the world, Chevron has a massive $320 billion market cap. While some of its competitors have begun to move quickly toward cleaner alternatives, Chevron has largely stayed the course and has reaped the rewards as energy prices have recovered from the lows caused by the early coronavirus pandemic. Only Exxon's 40-year record surpasses Chevron's annual dividend streak in length. Despite numerous market turbulences, including the pandemic, the Great Recession, and the dot-com bust, Chevron's dividend has risen for 36 years. Investors would do well to recognize the enormous level of commitment that such a track record demonstrates to dividend investors. Records like that are not built by accident. From a stock-only perspective, over the past 10 years, Chevron stock has increased from a $10,000 investment to roughly $14,400. Not really all that impressive. However, if you had reinvested the dividends, your $10,000 investment would have grown to $21,800, making it significantly more appealing. Considering how well the energy sector is currently doing, dividend buyers looking to purchase a large oil company would be wise to err on the side of caution. Despite the fact that Chevron's 3.5% dividend yield is not particularly high by historical standards, it should be the clear favorite. For the inevitable next energy downturn, if you prefer to take a more value-oriented approach, you'll want to keep Chevron's name on your wish list. Dividend investing can be a great investment strategy. However, you should do your own research before pouring in all your money and effort. Well, that's about it for today's video. If you liked our content, do leave a comment and a like. Click subscribe while you're at it. We'll see you on the next one. If you enjoyed this video, you're going to want to watch one of these 2 videos right here. Enjoy!